2 o'clock on the 2nd of November. This is Chris Pulver here, joined by my good friend and trading partner, Jared Johnson. Say hi, Jared.
Good afternoon, folks.
So we are here. It's 2 o'clock FOMC. Everyone has been waiting with bated breath, and it's finally time. So I'm watching some reactions. We'll take a look. I've got the DXY chart up. This is the dollar index. And in about 5 minutes, we'll check and see where we have some currency strength moving. We can take a look at financialjuice.com and see the headlines. Jerome Powell will be giving a press conference. Look at this. Even the Financial Juice is giving us memes. Man, this guy can't catch a break. About this high. That must be inflation. Must be must be this high to ride or something like that. So that's the meme stock. Anyway, I'm assuming that they raise rates 75 basis points. That's what was anticipated and expected, and what we should be watching today.
It's confirmed.
Yeah, it's confirmed to 75. Okay, good. I was going to say what we expect was 75. That's what the market's likely going to see and digest. It might be in processed, and what we really have to focus on is if this changes. So let's say closing bell today, Jared. If anything changes, I saw you talk about this last night with your trading group in the webinar. If we're going to be at 4.75 to 5%, 5.25, do you think the market's really going to have that big of a reaction, or is the Fed going to have to really shift the target to maybe another 50 basis points or 0.5% or another 1%? I mean, I'm just curious, what does it take for the market to dump everything today? What do you think?
I think it's going to be all about the press conference. I think
so.
Everybody was expecting a 75 basis point hike, but I feel like, as you look at the Fed watch tool, I feel like we're starting to kind of trail off a little bit on how high the Fed is going to hike things. And it seems like traders are betting on less and less of hikes. And so if Powell comes out in the press conference today and says, we're just getting started, folks,
right,
then, I think the 75 basis points is expected. Obviously, everything's reacting fairly positively. Yes, S&P is up a nice little chunk, but if he has a more of an aggressive, hawkish tone, I think that's going to hurt the market pretty bad.
Yeah, I agree. So let's take a look at a couple of things. We go to the smaller time frame. I am seeing a lot of action here in the dollar index, and one trade that we've been watching very closely is the dollar yen. So we're getting some really high volatility here. This has jumped about 100 pips in the last couple of minutes, which, back in the day, we liked those 100 pip breakouts in a news event. And so now we have FOMC that's making the markets move. We got CPI that's next week that's making the market moves. We have the midterm elections next week that'll make the market move most likely. So on that note, you saw the trade that I posted earlier. Any thoughts on a little QQQ strangle? Any thoughts on that? I'm long at 300. I'm long at 250. I'm just essentially saying, look, if there's volatility in the next, 2-3 weeks, I want to capitalize on it, because who the heck knows what Powell's going to say in the presser in here in about 27 minutes.
Yeah, I think there's plenty of opportunity for either to happen. So a little strangle is not a bad deal for this. So yeah, and those premiums look good, man. That's good option premium. So it seems like at this point the index, the S&P, the NASDAQ is kind of, I don't know. Again, I want to see what Powell talks about in his press conference, but I like the kind of consolidating, let's decide what we want to do. This is that end of year where things are typically pretty positive, but we've got the Fed overhang, which kind of has that negative tone.
Yep.
And I think it really leads to potentially just a sideways index. So
interesting.
A strangle, if things break out. What did you have, a straddle or a strangle on?
I don't know if the broker platform got it wrong, but my broker platform says strangle, but I'm pretty sure it's a straddle, or I'm going from the middle out. So basically, I did a long call and a long put. So I'm looking to see if price runs, I want a runner. So here's my position. Where's it at? Q's. So it says strangle, but I'm like, I said this morning, I'm like, pretty sure that's not a strangle, or certainly not a short strangle. Is there a thing as a long strangle?
Yeah.
That's like
long.
When I get into a choking contest, I feel like it's a long strangle.
when it
I often have those, often with myself. Seconds. It's like me, myself, and I just choke myself out, to go to sleep.
It's the best medicine.
So a long
No,
300
yep,
call, a long 250 put. So I'm assuming that's a long strangle. And so I
yeah.
paid I paid 425, but we're literally giving ourselves $25 worth of up because when I took the trade this morning, the QQQ was sitting at 275. So there's $25 of potential upside or downside. And I told traders this morning, if we get a chance to close out one of these legs at like $10 credit or better, then it's worth protecting. We had a nice chunk on XLE. We closed it out for a profit. We closed out an SPY long call for like $1.75, and we paid 80 cents for it. So we're getting those nice little, 100+% bangers on the long calls every now and then. We're really picky about those, but it's a lot of credit spread. So this is one I'm like, you know what? If the thing just moves, if we can't get the market to move on FOMC, non-farm payroll, CPI, and midterm elections, then it just wasn't meant to be. And so I'm willing to risk that on this debit. But I'm like pretty sure that lines up to like the quadrilateral. What would you call that with four super heightened news events? So
It's, I
anyway,
mean,
it's a
quadriga not going to
parallelogram,
work here.
of news. I don't know. So anyway,
Uh,
so what do you got running on
yeah,
today, dude? What are you
no.
looking at?
Well, I've been watching. I mean, I'm just watching everything, but I definitely want to see how. I'm watching the index. I want to see how the S&P does. I'm always watching the 2-year yields, kind of seeing how that goes. But
Yep.
specifically, just a little bit of just good old VIX, right? And it's
Yeah.
been pretty interesting. We had that little bump in the S&P just as the news hit, and the VIX was a bit bouncy today, but it's heading back down even more. So I'm just watching. I think right now you and I have a lot of positions spread across, a few sectors, lots
Yeah.
of positions on few sectors, which I think is the way to trade all this stuff.
Yes.
But just trying to keep my finger
Wow.
on the pulse a little bit.
Yeah, that's a big spike down in the VIX. Are we getting a bump up in? Yeah, we did jump. I mean, this was a negative 0.25. We're getting a big jump on the markets right now. Jared, I have chart alarms set all over the place, man. And a lot of those chart alarms that were on oil, dollar, gold, silver, I haven't had any of those really activate or trigger in the last like 3 or 4 weeks. So this meeting today is hopefully what just kind of breaks the market in motion. We just kind of put the market in motion somewhere to kind of drift over the next maybe 3, 4, 8 weeks. Do you think that there's going to
Mhm.
be, is it like really there's nothing to do right now other than let's see what the press conference gives us. Let's go this full hour and see, where the market closes today. I think that'll be important, right? The close of today, because we've had some fake outs, right? We've had some initial jumps on the press conference starting, and then what was that last month where you and I actually stepped out for lunch and the market just crashed that final hour? It was like we walked away with like,
Yes.
oh, everything's up, and then we came back and it's like, holy crap, the market just sharded itself for the last hour of the day.
Yes, yes. So here's an interesting little statistic for you. The last three Fed meetings before
Yep.
today,
Yep.
which today is seeming to live up to what the last three have done. The last three have had about a 0.8% increase in the S&P,
Hmm.
which was all given back within 24 hours. That's
Correct.
literally the same thing has happened the last three meetings. And here we are. The S&P is literally up 0.7% right now.
Yep.
But then historically, and over the last three meetings, it's all been given back within the next day, sometimes 2 days.
Mm.
So, the question is, one thing that I'm watching is on the bigger portion of the stock market, I'm getting more and more bullish, and on the smaller portion, but the more heavily weighted portion, I'm getting more and more bearish. I think our FANG stocks drag the S&P down more, but I don't
Yes.
think all the stock market goes down with the S&P going down. I just think, I mean, if you think about it, what made Amazon and Facebook, now Meta, and Tesla and everybody huge and in their place? They were inventing, they were creating new markets, they were bringing on new clients and customers for those new markets.
Right.
These guys don't make stuff anymore. They don't
Right.
invent stuff anymore. What is Amazon going to have to do to move the needle on their $120 billion revenue past quarter? I mean, what can they do to
Drone
make it more
deliveries.
interesting? I
That's it.
mean,
That's the
it's
next
going to have to.
innovation.
I think it's going to have to be like Army Rangers jumping out of an
Yeah.
airplane and
Jeff
parachuting to your front door.
Jeff Bezos will personally deliver like a hologram message to everyone when you get a package. He's not even the CEO anymore. So what am I talking about? It's the next person that does Amazon. Oh
Yeah,
wait,
yeah.
they
He'll
just
be.
did you get your free Amazon Music, by the way? I saw that little notice. It's like, oh, thanks for including that by jacking up my price $20 a year, and I get music included. So that's nice.
Here's my question: does anybody use Amazon Music? I never
I
have one
do.
time.
It's free. It's better
You
than, I mean, I'm either that dude. I'm an old school. I'll use Pandora for crying out loud, and still get my
Is
commercials.
Pandora still a
It's
thing?
still a thing, dude. It's still a thing. Yes, I do Pandora, and I
Unbelievable.
don't even care about those commercials. I'll listen to them.
Oh,
So
you know what? I'm in. I'm
yeah.
in. So yeah, I think that's where we go. Honestly at this point, I want to look for opportunities to see things like the big heavy stocks go up a little bit, and I
Hmm.
want to short them all, and everything else that's already down 50, 60, 70%, except for a lot of tech stuff. I just want to buy it and ride it. I think it's go time. But here's the tricky thing, right, about the Fed and the interest rates and everything. If they pause, which they haven't today, and we'll see what the press conference says, but if
Hmm.
they pause or slow down or anything, all the money just pours back into the stock market, and
Right.
everything they were trying to do is erased immediately.
Agreed.
So
They are. Did you read the article? We talked about that article yesterday. I'm like, that article to me, that was, I'll show it here in Telegram. It was a nice lengthy one, but it was pretty much just putting everything matter of fact of where we're at for the markets. Let me go to our little. I shared this in my Flex room as well. The Fed is about to drop the hammer on the stock market. And what I thought was really interesting was, some of the valuations of the S&P were back to like 1999, 2000 levels. The FANG stocks needing to get hit hard. Every time we've seen the market rally, that essentially just stokes inflation all over again. So, I mean, if the Fed is truly serious about 2%, we're a long ways from it. I don't think there's anything positive they can say. The reality, though, is I think we talked about this last week. If rates are at 4 to 5%, then you're looking at $1 trillion in public debt. That's going to be the largest line item in the Fed's balance sheet. And so it's
that's
like
a
how,
that's a
how much
healthy.
higher? How much higher that it's like? Do they really get up to 5 or 6%? We listen to that podcast in Search of Green Marbles from our good friends at White's Capital Management. It's like, can they stay there for 6 months? Possibly. Is it going to be painful? Yes, but can they do it forever? Absolutely not. So, look, at some point, all the central banks are going to have to back off. It's just, I don't know, man. It's like look. I don't know if you have a list going. Maybe that dry erase board behind you, is that all of the negative things going on in the world? You're just making a big list of things that are crappy in the world behind you.
Everything that's in red
Everything
is
in red is
a
terrible.
potential.
Yeah,
It is a potential zombie apocalypse
that's right.
catalyst.
Yep.
So
It's Russia, Ukraine, it's China, it's Taiwan, it's now Saudi Arabia, Iran, it's the Fed, it's this. It just, the list goes on.
the list goes on and on. But here's the thing though: if the Fed, by raising rates, they're trying to tackle inflation, but where is inflation the worst? Right? We've seen it number one in housing.
Yes.
Housing is just off the charts, which they're trying to fix a many year old problem, right?
Hmm.
2008 slowed down our building, and we're still trying to play catch up from that. So that's number one. But I'm just looking at the Federal Reserve economic data chart, and average mortgage rates now are 7.08%.
Yeah, that's brutal.
I think
Guess
I
who's
think
not
they're
buying a new
taming.
house? Yeah.
Yeah, this is the best time to not be trying to buy a new house. But
Wow.
but I think they're taming that enough, right?
Yeah,
Remember,
for
I mean,
sure.
I tried to buy a car over the last year and a half, and it was just so tricky until just a couple months ago.
Hmm.
That the car market, the housing market, that's where inflation was some of the worst. And literally, that's the only thing that's getting affected with the Fed, with the rates, right? Everyone
Right.
else is still buying all the normal stuff they buy,
Right. They're still
but
traveling, they're
maybe,
still
but maybe
spending. Yeah.
they're traveling, they're doing all the regular stuff, but maybe the housing market. I don't know if the car market was a big issue, but the housing market certainly was. And maybe if they've hit the housing market hard, and maybe that's enough. Maybe that's good enough for what they're trying to do, and maybe everything really was transitory in the end, right?
Right.
Who knows?
Peak inflation.
Peak inflation. Peak hashtag peak inflation. So yeah,
Hashtag.
we'll see. We'll see.
Yeah. So you mentioned, where it's hitting the hardest is in real estate and housing, but what about food and energy? We seem to also see a lot of data points that it's like, well, food and energy is excluded in the PCE and excluded in the CPI. It's like, why is it excluded when that's clearly what affects us the most? It's like people are still gonna pay their utilities, people are still gonna buy groceries, and yet food prices are going up, and energy is probably one of the stickiest points. And oil price today, I got a chart alarm on oil. That was one of the few that went off. Oil activated at 90 bucks. So, I mean, I know that we have this whole thing going on in Europe. And was there something that I read about, Russia's accusing the UK of blowing up one of their pipelines and just wreaking more havoc on these pipelines in the Eurozone? Like it doesn't look like any of that is going to resolve itself in a positive way. And we've had compressed oil prices. I know that you've got a pretty sizable position looking to go long. You're pretty bullish on energy in general, as you should be. It makes perfect sense fundamentally. And energy's been the one sector that's carried the markets this entire year. If you take the S&P earnings and you take out energy, everything would be contracting. So energy earnings, and look at what happened with Exxon, Chevron, BP, Saudi Aramco, all these companies are just reporting mega record-breaking profits, and they're just paying dividends and buying back shares, because they have tons of
Yeah.
cash. Um, so I mean, at current levels with oil, do you still like, just like light positioning, or are you like getting a little bit more committed, or you want to see some confirmation? You want to see oil above 95 before kind of get more aggressive, or you're like just kind of loading in right now? What do you like?
I feel like I'm kind of at a place where it looks like oil keeps making these failed attempts higher, and
Hmm.
I'm long term, I'm ultra bullish
Okay.
oil, like ultra. Short term, I feel like we could see a little bit of a pullback over the next 1 or 2 months in oil. I think it kind of comes in a little bit,
Hmm.
and so I've actually been taking profit on some of my energy positions. I
Yeah.
still have exposure, so if it takes off and rolls, it'll be okay. But
Sure.
I'm reducing exposure a little bit because of how well the energy stocks have done. Even though we're in the environment that we're in, things get oversold, they get overbought,
Right.
and I feel like energy stocks are creeping into kind of that overbought area just a little bit. So I'm kind of starting to take profits, starting to calm down some of that positioning,
Hmm.
and I'll plan on any kind of upcoming dip, I will load up so super heavy. But
Yeah.
I'm kind of thinking, material stocks may be ready to shine just a little bit. We see some of my, favorite CLF just down 5 or 6% today,
Yep.
getting hammered. So, I think these are getting a little more interesting, and maybe this takes a little bit of the steam out of the oil play
Hmm.
for just near term. But I think both of these kill it Q1, Q2 of next year for sure.
Yeah. Yeah, Alcoa, X, CLF, those are good ones. FCX is another one we're in quite a bit. FCX has allowed me to lower my cost base a lot. This one I have a $34 covered call for this Friday. I think my cost basis is now, yeah, 28 and $29, trying to get it called away at 34. So this also be one that I would certainly roll. Like I'm going to try to hang on to this as long as I can, but this is a bit more of a, this is copper play, mainly a material play. So I'd love to see that little rotation. I was looking at CLF this morning. You know, I mean, you and I both have credit spreads, I'm pretty sure, on CLF. If there's any chance over the next 5 or 6 months that CLF dips back into like pure value territory, how excited would you be to take ownership at like $5 or $6 a share?
Super stoked.
Okay.
I will load up
Yeah.
at those levels, because
Yeah.
at that point, a, the stock is so cheap, and b, um, I'm just gonna hold on to it. I'll be in it for the
Yeah.
long haul. If it takes a year to play out, I'll sell options. I'll bring in some premium. But
Hmm.
yeah, those lower levels, I'm excited. I've got plenty of credit spreads on there. I'll take assignment at lower prices. I'm happy for it.
Yeah. And and a lot of it, and it might not be just that. Let's say that we hold these current levels at 12, $13 and we get a jump from there. Like that'd be a great little broadening formation on CLF. But if somehow we do get into single digits, I think that what traders should be looking for would be a lot of this in a lot of sectors. Agree or disagree? I mean,
Yeah.
in tech, it's like, look, the highs we had in 2021 and 2022 are who knows how many years away. I don't think ARK is going to see the highs at 160 and maybe the next 5 or 10 years, maybe. I mean,
maybe ever.
maybe ever. Yeah, exactly. So I mean, tech, I'm certainly
Or
not expecting new highs, and it's like I just think that when all this potential like dust settles, that we just have like this lower, more boring, low growth environment that I think options traders like us are going to be really happy to see because we know how to generate income in that environment. And it may not be like the long term runs in the bull markets that have made everyone tons of cash the last decade plus, but if we can churn and burn, I think that there's 20, 30, 40% moves all over the place that we just have to be finding. So stay diversified. And I saw this in your webinar yesterday. It's like your cash position, your margin position, your buying power is like 50%. Is that right? One of the accounts you showed last night, like 50% buying power. That's pretty awesome.
yep,
And I think that's
yeah,
super important now and forevermore. It's like having that buying power to take advantage of when things are ripe for opportunities, and you can kind of load up the bus in a couple positions. I think that's awesome to have that buying power, and that's one lesson every trader should take right now, and make that a priority. Is keep that cash available. Have that cash available. It's okay to dump positions. I dumped shares last week. I took a haircut in OKTA. I dumped some Meta shares. I'm like, I don't need to hang on to this, man. Like, if we're gonna see $60 on Meta, I don't need to freaking hang on to it. Amazon, I dumped a little exposure on Amazon. I was like, I'll let some of these FANG stocks ride themselves out. If they're gonna be uglier and nastier, and the market's like, oh, you're not gonna grow at 15, 20% a year, and you're gonna grow at 6 or 7%. I mean, I just don't think they're going to get the same amount of love. So it could be a really interesting rotation away from FANG into other stuff. And I think that's where materials gets a lot of love for value and possibly energy as well.
money always has to go somewhere, so it'll
Yeah.
it'll it'll go. But the thing to think about, if you look at like this CLF chart right here,
Hmm.
if we get a lot of these stocks that go in these sideways channels, CLF's one example of many that these sideways channels are still 200 and 300% moves,
For sure.
right?
Yep.
So, if CLF goes nowhere for the next 3 years, if we can just buy low and take some profit and buy low again, and not plan on it's the trader's dilemma. Every time something runs, we think it's going to run forever. And if we just
Right.
say, look, we're probably in a range for a while,
Right.
and every time I'm up for the money, I'm taking it, I'm out, and I'm on to the next until that range breaks. And it could be a while.
I mean, I know this is a stock you played pretty nicely the last couple of months. This is also a pretty solid range. If we have, lows here to highs here, that's just a little nugget of 111%. So you can trade
Yeah,
ranges. You can trade
it's not
ranges
bad.
for double digit gains, triple digit gains. Like a little three bagger never hurt anybody. Yeah, that'd be awesome.
For sure. And the thing about some of these ranges too, for the option traders out there, it's a great opportunity for a credit spread. It's also a great opportunity to just be long options, because if we
Right.
get real range bound, then volatility goes down, option premiums will be cheaper. It'll be, more favorable to just buy some long calls and
Yeah.
hang on to them
Yeah.
and go for it.
Yeah. On some of that, do you how frequently do you do leaps? How far out do you go on some of your long options?
So if I'm just long the option,
Hmm.
not too much more than 60 days.
Okay.
Bullish credit spreads, you and I think we're both kind of going out 3 4 months on that, but
Yep.
just a long call, 60 days is about it.
Yeah, a lot of this year too. I mean, the last couple of months it's been like staggering credit spreads like crazy. 2, 3, 4 entries, stagger them out over 3, 4 months expiration. What I'm kind of getting ready for, and I want your opinion on this. If we can determine that the market's in a better position to actually let's use this as an example, CPE. If we like this level enough right here, let's say price comes back down to like $33. If I did like a 33 by 32, and I believe that over the next month or two this is going to be bullish, it's like I could set up let's say this is happening right now. I could set up like an 11/18 expiration, maybe go out to like the first or second week of December. You can either do like monthly expirations and have this staggered, or if we have a little bit more of a better feel and vibe for where the market is going, like it's going to be bullish, it looks better, longer term and medium term, that I'm kind of excited to stagger a little bit more like short term, stagger every couple of weeks. Like example being like 2020, 2021, we did a lot of credit spreads then, and the market was crazy bullish and resilient post COVID, and resilient 2021 when nothing was dropping until tech. It's kind of peaked out in March, April, and then in November. But if we have a set direction, it's nice to have, you can generate some income. If you have any shares, ride those shares as long as you can, but find some levels and find some dips to generate some income. So I don't know. I honestly, I think you would be here. Here's something you might enjoy. Would you like to see my notes, Jared? Would you like to see all the trades that I'm in? Here's my portfolio. Here you go. Read it and weep.
Good grief.
Here you
Good grief,
go.
man.
I'm not done. I'm not done. I'm not done. There it is. There it is. There it is. Those are all positions I'm in. So,
I don't know
needless to
how you
say,
keep track.
yeah. I like juggling. Oh, jeez.
Yes,
Yep.
apparently.
Get out of here. I don't know where these freaking spammers are coming on the channel. Get out of here.
Hey, spammers, my warranty has been extended already. I'm good.
Yes.
Uh,
Yeah, get out of here. So weird. Hopefully this isn't dragging my channel integrity down.
it's a very, very, very high quality channel still.
It
You're good.
is. It's
You're
growing,
good.
man. Speaking of, are we changing the name? This is just a question for you and I. You changing the name? We going Beyond Capital Group? We changing it officially our YouTube channel to Union Capital Partners?
It's
Shall we? We should, right?
it's happening. It's
It's
happening.
happening. It's happening. Good.
Yeah,
All right.
we're gonna
We'll get some rebranding there.
we'll get some good stuff posted on that. But yeah,
Yeah.
it's going down.
All right. Well, on that note, let's go to the website. Let's check it out. I know we've been working hard on this awesome logo. There we go. Union Capital Partners. We've got real estate. We've got a hedge fund. We've got private equity. Check it out. Yeah, this is fun. Huge project, years in the making. It's finally here, and I love the name. I love it. That logo looks sweet too. Nice work,
Yeah,
whoever a logo person was. Great work.
nice work, Mr. Logo Man.
Nice
But
work, Fiverr.
yeah, no. Thanks, guys.
All right.
Yeah.
Yeah, what's up, everybody? We got Paul in the house. Tarek is here. Linda's here. David's here. Jared, most importantly. Ruth Ann, what's happening? Richard, Gary, nice to see everybody. So, I mean, look, I'm not going to lie. This was kind of we're 3 minutes away from the press conference. Take a look at the price action. I'm watching, I've got 4 screens up and watching the daily on dollar yen and watching the 1 minute. We really just had that 80 pip, 100 pip move, and it pretty much just went sideways from there. So, that's great. Here's a little pop on the dollar yen. But how exciting is this for trading? You get one move in 1 minute, and then the rest is done. So I'm just going to talk technicals for a moment. Now, I, for one, would love to see this become a bear flag, but a lot of times during news events like this, Jared, especially when it pushes right into that daily trading range or exceeds it, we could also see that today's going to be noisy, and we have this little structure right here and the breakout of the news. I wouldn't be terribly surprised if all of a sudden we go right back up and fill the pocket, and this just becomes a noisy FOMC day. Thoughts on that?
I think, especially being the dollar yen, that's as close to a guarantee as you can get in trading.
Yeah.
That it just runs back up and chops around. But on the real short term, that could be a great bear flag. And I know all of us are pretty interested in seeing some bearish movement on the dollar yen. That's like 19 standard deviations away from the mean. So this would be a good time for that.
I'm pretty sure that I would be willing to teach myself how to do a backflip again if the dollar yen comes all the way down to the 200 EMA. And I say that because the last time I did a backflip, I cracked my head open and had like 10 stitches. So I'm willing to do it again because the pain of sitting in this trade for months and knowing I'm on the wrong side of it, it's worth the risk to put my body in harm's way to get this thing to pay us.
I'm telling you, listen, I'll do a backflip.
Frip,
front
I'll
flip,
frip, baby. Frip those frapjacks.
I'll frip. I'll frip for real. Whatever it takes to get this dang dollar yen moving.
I know.
Okay, hold. Don't go anywhere. I'm coming right back. 1 second.
Okay.
I gotta wet my whistle before we get the press conference. That's gonna be action. I'm coming right back.
Sounds good. All right, let's get some comments, everybody. I was looking at this is dollar yen. We had that big drop from, let's say, the high to low. It's probably about 100 pips. Right in here is, I'm counting 115 pips. A bear flag would be awesome. I do have a target, by the way, if anyone's paying attention on the daily time frame, which if you're my flex trader, and Jared and I've talked about this a lot, it's actually one of his indicators. The 200 EMA is down to it's 133.75, and that's a whopping 1,200 pips lower than current price. So yes, we need to see this thing ignite. Yes, we've had 2 different levels of intervention by the BOJ, but it has not been enough to shake this thing into a permanent bear market. Nor have we seen really the trends break, and structure hasn't really broken. So, one thing to be noticed today's trading is, it's going to be tough to grab that move unless you were already short. I mean, that happened in 1 minute. That was an 80 plus pip candle in 1 minute. So if you had a stop sell, then yes, you could have been filled if the broker was kind enough to fill you right where you put your stop order or stop fill order. But otherwise, there is a potential bear flag that if we break to the downside, tighter stop loss, try to get that in profit right away and see if this thing wants to run a little bit lower. We have our BOJ lows. Let me find that on my other chart here. The BOJ intervention lows are not too far away, but from current price, we still have about 90 pips or so to the downside. So if I let's go to the 4 hour really quickly. This is what I'm talking about. So can everybody see these other lows right here? So we have a low, and we have our pop this morning or this afternoon from FOMC. So if we have a bear flag, we could come back down and retest those lows. I actually had 2 stop sell orders right here, right around 145 and 144.50. I canceled those trades. And the reason I cancel those trades is because if this thing gets noisy where we have a drop down here to these lows, and then this thing pops right back up to that FOMC fill and that pocket gets filled, I don't want to get filled with the lows. If we're going down and we got 1,200 pips to work with, believe me, I can find entries on the way down on multiple time frames. So I just wanted to remove any type of like noisy trade in case the market spikes down during FOMC. The press conference should be getting underway here in a moment. We can take a look at financialjuice.com. And let me get some comments here. So let's see here. Yes, correct, David. So yeah, Beyond Capital is now Union Capital Partners. It's just, um, we had Beyond Capital was our hedge fund. We had Randall Fuller and Block Development. We had private equity, which was kind of a, so we're just calling it Union Capital Partners, and that's kind of the mother company or the parent company, and then it's Union Capital Hedge Fund, Union Capital Real Estate, Union Capital Private Equity. So just much easier to explain to prospective
The
investors. So
mothership.
the mothership, that's right. Beam me up, Scotty. Ruth Ann says, not listening, but Bloomberg headlining that Fed hints at entering end phase. Oh boy. Ruth Ann, did you read that article that I posted that Fed is about to drop the hammer? Because that author also mentioned a CNBC paywall and Wall Street Journal paywall article that the market kind of misinterpreted. So again, it's like, I don't know why the Fed would just all of a sudden pause outside of the fact that they want a soft landing and they want to pat themselves in the back by not crashing the market, making it one of the worst historical like this drawdown we've seen in market share. This is the longest drawdown we've seen. I'm not going to say forever, but pulling from my good friend Charlie Bolello, and I hope I'm saying that right. But that guy is just a chart data content machine, and I think this is like one of the longest periods that we've just had lower highs and lower lows, lower highs and lower lows. Because usually bear markets are aggressive. They say bear markets jump out of windows. And anyway, but yeah, I mean, hints at entering end phase. We'll see. I mean, the press conference just getting underway. I'd say prove it. Prove it, Jerome Powell, and let's watch price action because I don't think that guy wants to say anything that gives the market a chance to rally like crazy. I mean, I'd love to see it in the portfolio, but I don't think the market really is going to follow through what the Fed wants to see if all of a sudden we rally another 12 to 20% to the upside. That's just my thoughts. But looks like we're getting a little bear flag action, Jared. I think we have some fresh lows brewing. We're trying. There we go. We're
I don't
trying.
know. I feel tempted. I
All
feel
right, you
tempted to get
feeling
pulled into the
lucky?
market right now.
This isn't a bad trade. If you can go long, look, I'll say this: I'm short dollar yen, and this is making me super happy. My spider senses are tingling, and I've got a 1,200 pip move to the downside. But the reality is, if I could go long in the dollar yen, I would just buy it back above this high at 146.30, and I'd fill that pocket. And that's it. So I mean, I'd set a chart alarm here at 146.30. If we're going back up, we're going back to 146.90. That's maybe 50 to 60 pips on a scalp with a pretty tight stop. Otherwise, bear flag, bring it on, dude. Like I want this thing to drop like yesterday. So we'll see. All right,
Let's
press conference.
rock and roll.
Let's get some headlines here. Traders now price in a 50 basis points December hike. That's less than expected because it was 75, 75, and then going into like 25. I believe, for like February, March. So now it's 50%. Again, we can watch that Fed watch tool and see if that changes. We are firmly committed to lowering inflation, and we have resolve. So, I mean, Powell's not changing his tone. Job openings remain plentiful. Interesting conversation about this, Jared. The Jolt job openings, right? That news printed yesterday.
Mm-hmm,
How about
mm-hmm,
this
mm-hmm.
for something to chew on? I think COVID in 2020 kind of showed the world that we don't need as many workers, right? And so all these job openings that exist, it's like, do you actually think those jobs will get filled? Because I don't think they will. I think we'll always have like millions of jobs open, and we're always going to have this weird, not always, but we're going to have this labor shortage. I think longer than expected. So it's funny how we say the job market's so tight, and yet we just have less people in the workforce. Right? You know what I'm saying? Like, I just don't believe that the
Yeah,
jolt numbers are reflecting like how everyone's. It's like everyone can have a job, but not everybody's working, and I just feel like I don't know. I think that if you're taking a lot of the jolt stuff is like, oh, the job market's so tight and it's going to be tough for the Fed. It's like I just don't think those jobs are ever going to get filled, you know. But
I,
anyway,
I, I,
unbalanced.
I think you're right. I think you're right. I think it's. I think we have a gap that may never get filled, and maybe, you know, for example, I'm gonna pull a real technical example here.
Okay,
Taco Bell. That's right, Taco Bell.
Taco Bell.
There are many. There's still some McDonald's out there. There's some Taco Bells out there. There's some
Hmm.
of these like fast food places that have just permanently closed their dining room, whatever you call it.
Yeah,
We're going inside.
like the lobby or the whatever. Is that what it's
The
called?
lobby,
Lobby.
yeah, yeah, yeah. The seating area
I know
where
what you,
you eat
I know
your
what you're talking about. I clearly can't
meatball.
articulate it. The place where you go in and sit down on a chair. Yeah, we get it.
How do you say that in English? I don't really speak any other
It's
language,
been
but
so
what's
long since
the
I've been in one, I just don't know what they're called anymore.
dude? It's the truth though. Nobody's been to one in forever, but they're just closing them now
Look at
because
what did we
it
just say?
takes less workers.
Look at this crap.
Oh,
Look at that crap
there's a
right there.
noise.
Right there. How about that?
I'm watching all my gains from the news go away right now.
Yeah, so I've got euro dollar up on a 4-hour chart. That's screaming up there. This is super volatile, man. This is, I mean, if you're really trying to trade this and make a buck on the 1 minute chart, good luck. It's going to be really difficult. I mean, right there, you've got an 80 pip move on a 1 minute candle, and this is from 70 to, I mean, you have a 90 pip move on that candle. It's like in 1 minute, dude, you're getting all these crazy moves. Wow, yeah, nuts. So.
It's going.
So, all right. Sorry, I didn't mean
We,
your thoughts on fast food. Some are just permanent closed
I
or
just think people
close
are
the
getting rid
lobbies.
of.
Workers.
Yeah, they're just
Yeah.
getting rid of job.
Yeah.
There's just jobs they don't need to pay for anymore. That
Right. And
adds to the
pretty soon,
margin.
Flippy's going to be in every fast food place, right? Is Flippy like the robotic burger, robotic arm? Does fries, does burgers, does the whole nine? Pretty soon it'll have little robot fingers to take your. Look at this. It's filling the pocket, everybody. What'd I say? Obviously I said it. I didn't take it because I'm short. I'm not a non-US trader, so I can't hedge. But that would have been the easy trade: is put in a buy stop at 146.30, and you got to jump up there about 30 pips and looking to close that pocket around 50, 60 pips. But it be volatile today for sure. So let's see what's driving this. It's probably just the same crap that the Fed Powell is talking about here. So, significantly slowing the economy, demand far outweighs supply, labor market remains unbalanced, inflations have been higher than expected once again. Longer term inflation expectations remain stable, not cause for complacency. Slowing pace of rate hikes will become necessary at some point. Dude, that guy just can't throw the market a bone, can he? Like heaven
No,
forbid you
no
give the
bone.
market a timetable to be like, this is when we would stop. This is it. So I think we're going to see a big switch on the dollar right now. In 1 minute, let's take a look at the real time currency strength because it'll update at 240. I think you're going to see a big jump on that orange line because that dollar's got to be moving right now. I'm aware that high inflation causes significant hardship. Yes. Thank you, Powell. He's such a sympathetic fella. Strong measures to reduce demand, taking strong measures to reduce demand. Okay, the ultimate level of rates will be higher than previously expected. That's probably not a good sign right there. Just saying. How's that
The
make
market
everybody feel?
The market's showing it. It's not super stoked about that.
Right. Let's see here. Ongoing interest rate increases will be necessary to achieve sufficiently restrictive policy. They'll eventually turn inflation to 2%. Man, they're dead. They're dead set on that 2% inflation. Interest rate decision actual 4%. That was the 75 basis points. We've got stocks, gold, WTI strength, and dollar US 10 years weakened. I'd say not so fast because that's probably changing right now. Let's take a look at some of those yields, kind sir. US O2Y. That's the 2 year. This is on a 1 minute time frame. Let's go to something like a 1 hour, get some structure. How about that for some volatility on a 2 year today? Any
It's wild.
progress? Any progress to the downside? No. Any progress to the upside? No. So we haven't broken highs, haven't broken lows. Yeah, that 2 year remains pretty sticky. Wow, a lot
I
of
think
indecision.
I think these central banks and the Fed in particular is going to have to come to terms. It was kind of like when they said inflation's not a thing, don't worry about it. And I think, they keep talking 2%. 2% is in nobody's sights right now. They say it, but I think they're going to come to a stand where they say 4 to 5%. We can hang with that
Sure.
because 2% could take 20 years. 2% may never happen again, but
Well,
I think something manageable in the kind of the four-ish, 5-ish% range is probably where we're headed for the
yeah.
foreseeable future.
Well, let me ask you this. So we have for the last 10 plus years, we've had interest rates essentially at zero, right? So 0 and 0.25% interest rates. We've had inflation sub 2, but that's still, I mean, let's say you park your money in a bank or you park your money in a bond that yields next to nothing and you're still technically losing to inflation. So what's the difference of, did you see that the Treasury Direct was like 9.6% and it broke the internet, and then they just lowered it to like 6 point something percent and it broke the internet? Like
Yeah,
people are trying to grab onto like these 6 month yields, and they don't realize like if you take those 6 months and you then cash in on that bond, you're going to get penalized on the interest rate. So it's like it's just beware, like buyer beware that it's like 9%. It sounds so great, but it's like there are consequences to closing things early. There's lockup periods and hold periods, and also those interest rates are going to change. 9% was like that's a freakishly high level. 6% was the next bump lower. I feel like from 6% they go to 3 or 4%, and you're just going to have lower expectations. And so my point was, if the Fed is going to be at 4 to 5%, and inflation, let's say it comes down to 4 to 5%, I mean it's kind of the same situation or even a better situation than a bond that yields next to nothing, 1% or less, interest rates are 0% and inflation's still 2%. It's like it's just I don't know. It's a weird thing. Like I just don't think it solves. I feel like bonds are still not the answer. That's just my opinion. I feel like bonds have been beat up so badly. We saw the bond market break in the UK. I was concerned a couple weeks ago, and this still is potential, but the bond market might break in the U.S. And it's like if something breaks, then it's going to take the central bank to step in and intervene and fix it and prevent absolute chaos. But it's like that just again shows like how unhealthy and fragile these markets really are. And I hope that's not the case. I hope we don't have to break something in order for tetanus to align, in order for, highs and lows to form in the market, because right now we're just kind of running like relentlessly. So I don't know if I have a point to that. I'm just talking, but I was thinking about the numbers. Like it
what
just
is your
doesn't,
favorite color,
it
by the way?
doesn't, it doesn't make sense to have like zero interest rates and inflation at 2%. What the hell's the difference between that and having, you know, a 3 to 4% bond yield, and we're at 4.25 right now or whatever on some of these treasury notes, and to still have like 8% inflation? You're still losing to inflation, whether you're at 0%, 2% inflation, or you're at 4% to 8% inflation. It's still a losing battle. So
Yeah,
I don't know. I don't know why this bond market really is taking so much attention outside of the debt levels are at some point they're completely unsustainable. So when Powell says something like higher than expected, right? The ultimate level of rates will be higher than previously expected. I mean, the market can say, what do you mean by that? Do you mean another 25 basis points higher, or do you mean like 1-2% higher? Do you mean like Volcker higher? And again, that's where the market ends up breaking. So I don't know, man. This just seems like a lot of noise today. We've had quick movements and very little time. Let's go back to that dollar yen. I'm just really interested in how that's playing out. I'm seeing the euro dollar jump up on my charts. Here's the 1 minute chart again, and we just have like
Dollar yen coming back down.
I don't
What do we
know.
got?
It's just hurry up and go, man. It's like, or hurry up and wait. So like it jumps out to the downside, jumps to the upside. It just can't make up its mind.
Dollar
So
yen still looks pretty good on the slightly larger time frame though. We're hanging below those resistance levels. 150, we had a
yeah,
big long wick, and then
yeah.
we just keep having these stabs at the 150-ish and failing. So I'm calling that good. I'm calling that super good.
Yeah, I mean this is the daily time frame. I would love to see a close below that 50 EMA, and hopefully we just start making that trajectory lower. The one thing I'm not excited about is if this is like high to low, it's all about BOJ intervention and it's just dollar noise, and then we have this. We have this for the next like 6 months, and this moving average is going to just slowly make its way up here. Eventually it'll be a hit, but it's like I still think this hopefully is going to be a top. Um, as
Let's
as you
go.
as you learned a couple weeks ago, Jared, this is the inverted saucer.
The inverted saucer.
That's right. The name
We
that
need to
no
come up
traders
with some
ever
names.
used. Yeah.
I'm gonna
Actually,
call
that
that the I'm gonna call that the World War One army hat
yeah,
pattern.
that's a good one. I'll call that the Lloyd Christmas. That was his bowl haircut right there. The Lloyd Christmas. Or it looks
uh,
like I just drew an Easter egg.
Easter egg slash some teeth on Monsters Inc.
There you
Kind of
go.
situation.
So
Look at give us a little FXY.
FXY. Oh yeah, the old yen.
I'm long FXY,
Same.
and they actually already assigned me some shares from my option play I have.
Yeah. Are you holding those shares?
Yeah, I've been holding them for weeks.
Look
Let's
at
see what.
you. Look at you.
Yeah, they gave me shares, and I said, all right, I'll take some shares on FXY. They didn't give. Let's
Okay.
see, what did they give on there? A couple hundred shares, nothing too crazy, but
Okay.
still bullish FXY. Still, I just think that thing has got to. You know what I'm saying? Like
Yeah.
there, any chart, any market, anything, anywhere. You just have to think, have you gotten to a point where you can't take it anymore? And that's the top or the bottom.
Right.
And so I think there's a lot of yen traders out there that have thrown in the towel, that have said the yen, their debt to GDP, their inflation, their interest rates, everything's just so out of whack, forget about it. And somehow, as human beings on this lovely planet we live on, we find a way out of the worst case scenario very often. Not
Sure.
all the time, but very often. So
Yeah, that's a good point.
I think there's a chance that there's some normalization going on here. Japan has done things very differently than a lot of other countries for a long time, and it just kind of keeps working for them. So it's all an experiment.
I mean, outside of that 1989 high in the Nikkei 225, I'd say that's the one thing I wouldn't have working for us.
That was
A
that was
thir-
no bueno.
a 30-year down decline to get back to the. I mean, we're not there yet. 33 years later, we're still not at the highs from where that thing broke. So,
Patience,
yeah,
patience.
yeah, patience, patience. Oh, that's great.
30 years, that's
Patience.
all right.
Yep. I'll be dead by the time. No, I mean that would be terrible, right? 1989. It's like buy it, and then just dollar cost average in for the next 30 years.
Is it safe to
I
say
die at break even, Jared. That was my goal.
I didn't lose
Oh
any
boy.
money?
Yeah,
Is it safe to say that America, maybe more than any other country on the planet, you ready for this?
I'm ready.
More than any other country on the planet, America, I think, is more obsessed with making money at all costs. We sacrifice a lot for this, by the way. Standard of living, general mental and physical health.
For sure.
Uh,
Yeah.
we we give it all up to just be rich and get rich,
Yeah.
right? So
Chasing that
that
dream,
being the
man.
case,
Yeah.
if you can't get Instagram likes, what is your purpose on the planet?
Yeah.
But we kill ourselves for that, and it's a terrible culture, but it's also a slightly predictable one when it comes to the financial markets. We always find a way to make new highs. We find
Yeah.
because that's what we do here, right? We don't say, you know what, I'd rather be happy and healthy. We say, no, make money, make that money. So that's my bullish case for the U.S. economy right now. Let's see if it plays out.
That's a great point. Yeah, man. It's we're like generation hustle, right? The
That's
whole
right.
world. Shout out to Adam. Adam's popping on the channel. What up, Adam? Is he in the office today?
Oh, Adam. I think so.
Is he? He's just tuning in,
Adam.
saying what's up.
Adam.
Let's see,
I think so.
4% in a safe haven currency. Yeah, 4% in a safe haven currency. It's like, and so here's what's interesting. Let me get your opinion on this, Jared. So clearly, this whole idea of like, the world is moving on. This goes back to 2010. Stansberry and Associates and Dr. Steve Juggerand or whatever his name is, and Porter Stansberry, the death of the dollar. Um, that is the furthest thing from the truth when you look at 2021 to 2022. This has been all safe haven flows, all world reserve currency, and the dollar has again regained its title. But let me ask you this: what are the ramifications for having this much strength in the dollar when it comes to emerging markets, when it comes to third world countries, when it comes to everything that has the dollar priced in it? I mean, do you see more consequences ahead where at some point this becomes like it's time to countries will rid themselves of any type of dollar exposure, dollar denomination, simply
Well,
because they are just getting killed by it.
I think so. Think about. I mean, what is the thing that we heard all along when oil was up there, right? Demand destruction,
Hmm.
and we could definitely see some of that in the dollar. It might just be that the dollar strength is the dollar's own worst enemy, where
Right.
people are. I think you're right. These emerging markets say, guess what? We're using something else. We're going to quit all trade with the US. We can't afford it, right? You can. I
Hmm.
mean, it's insane. So yes, the dollar's strength could be its worst enemy, which is why I remain very bearish at these levels on the dollar, because if word like that starts spreading around a little bit, that's going to be tricky. So yeah, I think we could see some pain there. I don't know if everyone else is, when the reserve currency is so strong, something else happens. What happened when all the eurozone uh, countries, when the euro was adopted, and these eurozone countries started having pain, and Spain had a financial crisis, Greece
Right.
obviously had a major one,
Right.
Portugal, because the currency was too strong, and
Like,
all of a sudden they had to either adapt or just default.
yeah. Do you think it was intentional? They called it pigs. Portugal, Italy, Ireland, Spain, Greece.
I miss the good acronyms. Pigs was a really good one. I think whoever made that up, now they'd be canceled and kicked off Twitter or whatever.
That's
Actually, they
true.
might be reinstated on
Actually,
Twitter.
yeah, you'd be back in and verified as a lord on Twitter now. I think for eight
Eight bucks,
dollars. Yeah.
$8 a month, man.
Lord
I'll
Jared
pay it.
Johnson.
I'll pay it.
What was I going to look at? I want to look at that dollar yen. I want to see if that 140, if that little break up 146. I think, yeah, I think that trade 146.30. We're filling that pocket, everybody. So a little action there, not a hard trade, just looking at some price action. Noisy on the press conference, and that's the best trade. Oh my gosh, the pocket's already filled. There you go. There's your 60 to 80 pips on trading today. So your break was right here above
Woo.
146.30, little noise, but off you go, pocket filled. And, look, at the end of the day, this might be exciting FOMC, but nothing actually happened. It's called interruptive, and we just kind of have to sit back and wait. Guess what? We've got non farm payroll on Friday. We have midterm elections and CPI data next week. So it's not like today's the only show in town. There's a lot more stuff coming with U.S. news in the next, literally the next 7-8 days. So, yeah, there you
Yep.
go.
Yep. Hanging tough, man. Lots of stuff coming this week, so it'll be exciting. We'll see how it rolls, but
Yep.
so far
Uh,
so good.
Interesting comment. Official Jo says, safe haven currency $1.46 on dollar CAD. I do love this trade actually. I am currently sitting with a pending short. This is higher time frame, but I'm sitting with a pending short on dollar CAD at 1.46, which is way up here. You have to go back to the weekly or monthly to see that high. I think this would be a pretty fantastic trade here, Jared. You like this 146 level? Because I do. I
Are
don't know if we
you
get there, but I'm setting it up, man. Like that right there. I'm shorting that puppy all day.
that looks like that might be the world's largest triple top, but that looks
There's a
great.
high.
Yeah.
There's a high. I'd love to see a high. And even again, I'd love to say we're coming all the way back to the bottom, but even if we get to the midpoint, right here, you can see all this noise around 132 to 135. I mean, if you shorted at 146 and you had a 1,000 pip move, I think you can make some traders happy there. I would be happy.
Yeah.
So there's a nice
Yeah.
little hedgy trade for us with those big extremes and investor oriented positions. I do that on dollar CAD. So good stuff.
I love it.
Food
I'm
for
sure
thought.
scared about that.
So, all right. Any final thoughts? Any final parting words? I would say for the most part, we had some volatility, we had some excitement. We know that Powell's message didn't really change. There's still a lot of fireworks ahead in the next 10 days, so the market's not done moving. Overall, where we at a glance, the SPY is down 1.13% at the moment. Let's go to the daily chart to see what just today is. And Jared, take it away. I'm hogging the microphone. So we're down in the day.
No, that's we had a nearly 1% bump today. I was able to stay for a solid 20 minutes, and so given the gains back, down we go.
Yep.
I'm still bearish SPY, so
Same.
I'm not too sad about it.
Yep. So this is a 2.47 move, just high to low on the day. I saw that you posted this too in your group, the 365 by 360s. I'm still holding those out to January and March, and those were, I think we collected like 360 or 370 on both of those. So we're looking at $3.70 a profit for $1.30 risk. We have an Apple bear call spread. I've got my little my long strangle on the Qs. We also have some Vixen plays. So yeah, we've got a couple of spokes, whatever. I'm not going to try to say it. I don't know what I'm saying. We have some exposure on some hedges. How's that?
You got to have something. You got to have something. I'm enjoying, by the way. This is a little broker specific, depending on what kind of approval you have for everybody out there for the various platforms. But I'm enjoying just options directly on the VIX.
Yeah.
That's a good play right now. That one's been pretty decent. In fact, I have a long option. I have a long put spread on the VIX right now. That, well, it's not really doing that much. VIX is kind of just staying put.
Okay. So are you trading the range? Trying to did you get in here looking for it to go lower? Or are you going?
Yep, I'm just trading the range. I got a little put spread with a pretty long expiration.
Okay.
And I'll throw another one in there.
Yeah.
The VIX is unlike so many of these other stocks, right? If something crazy happens one day, the VIX is straight up.
Right.
The thing that I like is the implied volatility on the VIX, which, who sets that, by the way? Doesn't the VIX set its own implied volatility? I don't know. But I think the VIX is great. I think we all need a little SPY exposure, a little VIX exposure, to kind of hedge against some of that downside. And then I think there's so many more things I'd rather be long in right now, which I am. And then I've just got a little bit of protection from the VIX, a little protection from SPY.
Yeah.
Probably put some things in there as well.
Good stuff. Yeah, and just a quick note. I mean, trading rooms. People know you from sessions we've done, and we obviously work together, and Union Capital Partners and all that good stuff. If traders want to trade with you, Jared, how can they find you?
That is a very, very good question. And
is your group closed? Is it closed or is it open?
My group is closed, but I'm open to discussions with people. So you can stop by daytradersfx.com and submit an email, and we'll get back to you. We're not actually taking on new people, just trying to manage who we have and run the hedge fund and do all that stuff. But I'm always interested in chatting with traders, so stop by and say hi.
For sure. Daytradersfx.com. And then, I'm running trading rooms, equities on demand, Monday through Friday. Flex trading room, I'm doing. Jared, this week I'll have a solid 30 live sessions this week between webinars and classes. So no big deal. And that is for a new system that I just developed called MasterFlex. And I'm having a lot of fun with that. There's an awesome dashboard. It's a great robot, great system. So anyway, trading rooms for me. You can find it on my website, pulverreport.com. And you can trade with me live for a month for $27. It's a little trial period, but trade with me for 30 days. Pick your poison. You want to trade stocks and options? We do that. You want to trade forex? We do that. So anyway, that's how you can find us out there, everybody. Final thoughts, Jared. Think we can wrap it up. It's been an hour. It's been a fun hour. The power hour. The too sweet to be sour.
The hour of power has not gotten sour, so I think we're good.
Okay. All right, everybody. If you do us a quick favor before you go. Just click that thumbs up button for us on the channel. Like it, support the algorithm, support our channel. Good stuff. And look for that little group change. We are we've had some videos out there, some great videos on the Beyond Capital Group YouTube channel. Soon that will be morphing into Union Capital Partners. So Adam, thanks for tuning in. Round of applause to you, sir. Glad you're in the office. I wish I was there. Linda, thanks for joining in. Jo, nice comments there, and everyone else. See you in the trading rooms. Let's have a good rest of the week. And exciting stuff. Literally, my P&L just fluctuated to right back where it started. So that pretty much sums up the day. A lot of noise. All right, everybody.
Just like nothing ever.
That's right. Just like never even happened. We're just here talking, just having fun. All right, cool. All right, dance party at my place. See ya.
Yeah,
All right.
it's happening.
Thanks, Jared. See you guys. Bye.
See ya.